Just over an hour now to the opening bell on Wall Street. Joining us now, Nadia Lovell, senior U.S. equity strategist at UBS. Good morning, Nadia. One of the points we made earlier was that compared to last year, people aren't nearly as negative on the markets, yet it's still doing very well. It keeps hitting new highs, even with rate cuts not on the horizon. It still seems to be melting up, maybe on earnings. Is that what we're seeing?
Yes, absolutely. You know, of course, the Fed and the direction of interest rates are important for markets, but what's more important for equities is really earnings and inflection points in growth. And we're seeing that. We're seeing economic growth and earnings surprise to the upside, and previously depressed areas of the markets are now seeing, some signs of life. And so we think that that's important for a broadening out of the market. We still continue to like tech and recognize that though the performance gap is likely to narrow this year. And so you need the other participations of the market to get upside from here. I mean, admittedly, I would say in terms of our upside scenario, we are looking for about 5,000 on the S&P 500, and we're close to that level. But the upside scenario does call for 5,300. The data is coming in better than I expected. But maybe to use a term of the Fed, more data is needed to get greater confidence that we're on path to that upside case. So do think that there's much upside, but we have to see how the data sort of unfolds from here.
So you do expect some broadening, Nadia, but we were trying to figure out a lot of different names. Now we're on, I think, the Fantastic Four. It's not the Magnificent Seven anymore. Is it going to broaden out, or are you still in that arena with those great big cap tech?
We do think that, the mega cap tech companies can continue to perform well and outperform, but we are looking for a broadening out of the rally. We are using our risk budget to really get cyclical exposure to small caps. Now, I know the small cap has had a tough start to the year after the rally that we saw into year end, but we think that there's upside to small cap, particularly as the economic data is coming in better than expected. We're seeing recovery in the manufacturing segment of the market. Look at the ISM last week. And at some point this year, the Fed is going to cut. It's just a matter of time, and that should be overall positive for small cap. And so we expect the small cap to catch a bit as the year progresses.
Any change in leadership versus last year that you're picking up, Nadia, for investors?
So far this year, not so much. You're still seeing like the mega cap tech perform well, but you're also seeing some life among some of the more cyclical areas of the market. If you look at industrials, if you look at financials, throughout this earnings season, you've seen pretty good earnings from these companies. You're seeing that, industrials are suggesting that the bottoming in manufacturing is happening. You're seeing pickup in investment in terms of onshoring and infrastructure, and so that's a positive. The banks also are doing a good job in streamlining their business in terms of reducing headcount, and so they also are catching a bit. So you're starting to see signs of that, but not just fully yet.